Welcome to Financial Buzz Market Weekly. I'm RK Walker here at the New York Stock Exchange, bringing you a review of this week's stock market. On Monday, U.S. markets were closed for the President's Day holiday. On Tuesday, the PMI Manufacturing Index flash for February dropped slightly by 0.8 of a point to 54.3. However, the prior month was at a 14-month high. Some good earnings reports from Wal-Mart and Home Depot boosted investors' confidence, and the Dow Industrials, the S&P 500, and the Nasdaq composite all closed at record highs. On Wednesday, existing home sales for January rose 3.3% to an annualized 5.69 million units. The Federal Reserve released its minutes for its previous meeting, and the tone was decidedly more hawkish, with increased emphasis on the fact that rate hikes would be needed fairly soon. The Dow Industrials closed at a record high. However, other major indexes fell slightly. On Thursday, jobless claims for the week ending February 18th rose 6,000 to 244,000, and the four-week average was 241,000, its lowest level since 1973. The EIA Petroleum Status Report for the week ending February 17th showed crude oil inventories gaining 600,000 barrels. U.S. crude gained slightly to close at $54.36 a barrel, and the yield on 10-year Treasury notes closed at 2.38%. The Dow Industrials closed at a record high for the 10th straight time. On Friday, new home sales for January rose 3.7% to an annualized 555,000 units. Markets opened modestly lower on profit-taking. Now let's take a look at some stocks. On Wednesday, Chinese microblog portal Weibo Corporation reported better than expected fourth quarter earnings. However, the stock fell more than 12% on the news. Beijing-based Weibo said fourth quarter profits surged 125% to 43 million, or 19 cents per share, compared to 9 cents per share a year ago. Restaurant company Texas Roadhouse tanked over 13% Wednesday after the company missed both earnings and revenue estimates during its fourth quarter. Texas Roadhouse reported earnings per share of 29 cents on revenues of 484 million, missing analyst expectations of 38 cents per share on revenues of 497 million. The company also raised its quarterly dividend 10.5% to 21 cents per share. Restaurant Brands International, the owner of Burger King and Tim Hortons, announced that it agreed to buy Popeye's Louisiana Chicken for $1.8 billion. In the deal, Popeye's shareholders will get $79 per share, which represents a 19.5% premium over the stock's closing price last Friday. Shares of Restaurant Brands also rose over 6%. Walmart stores posted fiscal fourth quarter earnings that topped Wall Street estimates thanks to strong growth in online sales. The world's largest retailer said revenues rose 1% to $131 billion in the fourth quarter, slightly missing analyst estimates due to the strong dollar. Although Walmart's profitability declined recently due to heavy investment, the company still posted adjusted earnings of $1.30 per share, beating estimates of $1.29. Shares rose over 3% on the news. Shares of Tesla were down 5% after the company reported mixed fourth quarter earnings and also a departure of a senior executive. Tesla lost $219 million, or 78 cents a share, on revenues of $2.3 billion. Compared to the previous year, Tesla lost $320 million, or $2.44 a share, on revenues of $1.21 billion. This is Financial Buzz Market Weekly. I'm RK Walker, and I'll see you again next week.